Trading looks so simple. All I have to do is buy and then sell. Two things: buy and sell. Right? Buy and sell. There's nothing more simpler than buy and sell. That's it. That's all you have to do, right? Well, after trading for 20 years and losing uh, on a regular basis, it's true when the market is going, when the market is green, it always works out, right? But when the market is red, buy and sell normally means buying high and selling low. That's what it means. And the market has a tendency to mix things up so that uh, at the worst moment, the market brings out the emotional part of training that that makes the logical side to take a back seat. And when that happens, a significant uh, a loss can occur, which normally in the trading world, the lingo is called blowing up. I learned something today. This is, what is today? Today's May 9th, 2022. It is approximately about 22 years after the 2000 tech bust. Okay? So ever since then, I would put in a few thousand here, a few thousand there, a few thousand there, and I would see it just flush it away, like 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 paper in a toilet bowl, right? Then it seems to be finally sinking in that it's like a, if I can just imagine it, it would be like an umbrella. So today is a fine example in Boise, Idaho. It snowed in the morning and I had a mixture of slush. And I had this umbrella over me. And it seems to me trading is just like an umbrella. Initially, all I do is buy and sell. Buy and sell. That would be the umbrella handle. Then recently, I've looked at my data, and attempted to make sense of what trading is by experimenting, trading, taking losses, recording it, and then looking at the data, and then reviewing and studying up on YouTube videos on professional traders. One video that surfaced today that is now starting to make sense, whereas the professional traders have been making these statements in the past, but it just flew right over my head, just like that Top Gun movie, Maverick 2. So what flew right above me that I could never understand was this: there are 4 steps to being a highly profitable trader. The first stage, where everybody goes through this, is a massive loss. Now, massive loss can be is a very complicated thing, because multiple things could occur. The first thing that will occur is that, ideally speaking, when a thesis is incorrect, I exit, causing the minimal amount of loss. But what happens is that a novice will just let it go, and there's this fear of missing out, thinking that, okay, so right after I sell, what it's going to do is it's going to pop back up, and that holds hostage to that trade. And that's what 93% of the people do. Okay, out of 100 people who make a trading, the difference between a successful day trader and a non-successful day trader is knowing how to cut losses. That's it, right? Because even if you are afraid and you make a little bit of money and you get out, you're still slightly profitable. So those people who are losing money that way, not being able to, they initially have a taste of how the market can make money because they place the trade and it goes in their direction. And then it goes, and then they sell and they make a profit. That is the easiest thing you can do in trading. The hardest thing is making money when the market is red. Because normally, probably more than 90% of the people do not short. That's why they're novice. So in order to transition into a professional day trader, you have to short the stocks. Now that can push an individual above a slightly lost stage of day trading. So now getting back to the point where a cutting losses is a very, very important part of day trading is this. Okay, so if I let a trade go against me, it could be a difference between a 5% loss to 25% loss. Okay, the really good traders, they know as soon as the thesis is incorrect, they know it. They just immediately get out, and the loss is maybe 0.5% or even smaller, because they know that they've recognized a particular thesis and they see it right there. However, there is a probability, a certain probability that occurred right after they saw that particular setup, and it reverted, which means that it could possibly be an extended long reversion, or it could be a short reversion, but the professional day trader does not want to get involved in figuring out what that is, because the drawdown could be incredibly, it could be a substantial amount. So what I discovered from today's video is this: as soon as I enter and I gauge whether my thesis is correct or incorrect, then if my thesis is incorrect, I get out fast. If I get out fast, then my losses are minimal. So that is something that I need to work on. And once I make that into a habit, then I can figure out what the proper entry is that allows more better trades to occur, so that when I look at certain setups, which ones do I want to trade, and being more selective in the stocks that I choose will push me across to the threshold of being profitable in a small amount. And then I believe at the other end of the spectrum is this: the elongating the winning thesis and maximizing the size component of the trade will push me into the massively successful day trader. Once I cross that threshold, a simple manner of just multiplying my capital risk will allow me to increase the gains, because I have proven that whatever I'm doing in small amount of gains is consistent. And if I increase that amount by a factor, then that factor will incorporate into the winning strategy and increase towards being extremely profitable. That will be one simple factor in helping me move towards a highly profitable day trader. And I learned of this other factor of how perhaps maybe fund managers who are managing billions of dollars. They're able to hedge their trades by doing interesting things. And so we're talking about 8, 9 figure returns, but we're not there yet. So today, after 22 years of massive losses with sporadic wins, and wiping out my gains for the past year or month or a week within a matter of 2 to 3 days, it has finally occurred to me that nobody mentions this. All they say is this: you have to learn how to cut losses, right? The more detailed response should be this: if your thesis is incorrect, get out. That is the first true steps to moving towards being highly profitable.